Indonesia's benchmark stock index has plunged about 36% this year, making it the world's worst performing major equity market. And Olivia Marzuki, she's been tracking this story. She joins us right now for more. So what is the main issue here? Is it fundamentals? Is it confidence?
Liz, essentially it is a test of confidence. So for years now, Indonesia has been seen as one of Southeast Asia's strongest growth stories, most compelling growth stories. It is supported by strong economic reform, abundant natural resources, and demographics, and the middle income class. But investors are now reassessing the country's policy direction, especially under the leadership of President Prabowo Subianto, which has been facing mounting criticism.
Yeah, so how much of it is centered on his policies?
A lot of it is. So basically, the administration's been pursuing a more interventionist approach, arguing that a stronger state role is necessary to accelerate industrialization, to create jobs, and to boost economic growth. Supporters say, obviously, the stronger hand is needed if Indonesia wants to move up the value chain and also meet its long-term economic development goals.
Yeah, but as we've seen, investors don't feel the same way.
Not at all.
Right.
So this is the story that we've been covering for quite a few months now. Investors are not questioning the intention or the ambition itself. The hesitation is more on whether Indonesia can boost growth while preserving that fiscal discipline, that policy credibility. Those are the factors that help Indonesia attract foreign capitals the past decade. So those concerns are now more pronounced after the departure of former Minister Sri Mulyani Indrawati, who's been seen as a key anchor of fiscal prudence.
Yeah, and speaking of the concerns, we're seeing that reflected quite strongly in financial markets, from the rupiah to the stock exchange. Can you tell us more about that?
Well, Liz, we know that markets don't like uncertainty. We've seen weakening rupiah, we've seen capital outflow, we've seen foreign investors offloading and reducing their exposure. And as a result, Indonesian assets have lagged behind many of its regional peers. And what's also attracting attention recently is a sweeping bill recently passed by the parliament last week that effectively expands Bank Indonesia's role in supporting growth and actively jobs creation. So it gives lawmakers also the power to make binding recommendations for the central bank and also for financial regulators. Supporters say that it could help strengthen economic policy coordination, but obviously critics worry that it could lead to questions about institutional independence.
Right, and as you've been explaining, it definitely runs much deeper. And so we'd like to bring in Edward Gustely, his co-founder and managing director at Penida Capital Advisors. Edward, starting with, the president's supporters arguing that, a more interventionist approach is necessary to accelerate industrialization, achieve faster growth, but clearly investors, they don't think the same way. Help us understand that disconnect. Which policy decisions you think in particular have had the biggest impact on investor confidence?
Well, thank you for having me. And I think there's a number of list of issues that have taken place over the last 12 months that is begin to question and erode investor confidence. And we can go back on several items, not just the recent bill that has passed involving Bank Indonesia and its key independence role, but we go back to the issuing of Patriot bonds at below market rates to wealthy Indonesian conglomerates and families to fund Donatara's role as a sovereign wealth fund. We can go to still the Martabi gold asset seizure in Sumatra, which has still not been resolved. And then we look at the MSCI review of either a downgrade or a continuation from emerging market to frontier market. So when you add that, in addition to last week's announcement that Parliament has passed greater oversight of Bank Indonesia and wanting Bank Indonesia to play a greater role in the growth story of Indonesia, to not only grow it, but to accelerate it, investors are taking what I would call a pregnant pause to evaluate who at the end of the day is safeguarding the stability in the country.
I'd like to zoom in on that, Edward, the oversight and the concerns over the expanded oversight on Bank Indonesia, which now carries a broader mandate. BI's holding of 27% of government debt also being flagged here. My question is, Are those concerns justified? What would convince markets that the central bank's independence stays intact?
Well, right now, what global fund managers, investors are looking for is reassurance and a physical anchor that they trust, a central bank that is free to pursue its mandate, and greater transparency around Donatell's role and the state's role in the economy. What we're seeing is what has traditionally been a market-driven economy based over 25 years since the 1998 crisis, where Indonesia had to implement very, very strict financial sector and capital market reforms to rebuild investor confidence and trust and growth. There is questions if that is now being put in jeopardy, given this acceleration of policies that investors are questioning the execution skill sets needed that will bring private capital back into Indonesia. And just to give you an idea, if you look at what is needed for the president's goal of achieving 8% growth, at 7% growth for Indonesia, that means it's absorbing the 2 million that enter the workforce every year. And right now it's trending at 5%, and the World Bank just came out and said they're forecasting 4.7. So if you continue these policies, the investors are saying, hang on here, we're going to take a pause. We're going to see how this all plays out, how Bank Indonesia's role is going to be impacted. Is it truly the last responsible safeguard for stability, or is the government asking Bank Indonesia as the goalkeeper to move upfield and start trying to score goals? And that can work on occasion, but then who is safeguarding the net? And this is really what we're beginning to see from the feedback from investors and capital allocators, that they are not comfortable with the direction simply because they're not comfortable with the execution and the skill sets needed to do that from this administration.
Yeah, and I'm curious as well. You advised for former Finance Minister Sri Mulyani, who was seen as, a guarantor of fiscal credibility, conservatism as well. How significant was her exit as a turning point for investor sentiment?
Well, many of us had forecasted that she was kept in the cabinet to provide that level of continuity and transition into a new working cabinet. And so at the end of the day, it didn't really come as a surprise. Obviously, her exit and the way it was handled was done very poorly, according to what the market had perceived. But nonetheless, she was a calming voice, and she was able to convey comfort and confirmation to investors as to exactly what the fiscal policy of Indonesia was, what were the economic drivers, what was the physical discipline necessary to give and broaden and deepen capital allocators to participate in Indonesia. Today, we are in a situation where we see, again, as I mentioned, this market-driven economy being more led by a state-driven economy with the various tools that this administration has and is implementing. And again, that is not necessarily providing the comfort and confirmation to investors to deploy their capital. In fact, they're pulling back. And so what the result is, you see an erosion of the rupiah value, you'll begin to see an erosion of asset values, and you'll begin to see an erosion of investor confidence over the 25 years of hard-earned market reforms that the country has done. So this is what the recipe is right now. And I think, for an analogy, investors are waiting to really find out if the current cooks in the kitchen can come up with a recipe that wins over their trust and confidence again.
All right. Thank you for your insight today, Edward Gustely, co-founder and managing director, Penida Capital Advisors.